Thank you very much, John, for the lovely welcome, and thank you, ladies and gentlemen, for spending your Sunday afternoon with us. And I want to introduce you to Sonoro Gold and our Cerro Caliche project, which I believe has been put together from inception, from the actual acquisition of the project to a production decision in 3 years, which is, I consider to be quite remarkable. And the project, as you see it on this screen here, encapsulates the project quite adequately. Where you see in the foreground of the photograph and the opposite side of the ridge is 7 years of mine life on the basis of producing 45,000 ounces a year net production. So going on from there, with cautions, we have a management team that I believe has more experience than most senior companies on the market. John Darch and I have each over 40 years experience in financing and managing and developing resource companies around the world. Our technical team in Hermosillo, Mexico, Mel Herdrick, 40 years experience in locating gold mines, and over the years he's been responsible for the discovery of over 5 million ounces of gold. Along with our mining engineer and VP operations, Jorge Diaz. Jorge has been operating in Mexico, designing and building gold mines and copper mines for over those 40 years. And he's got 10 to 12 mines to his credit as far as construction. And he built a private mine 6 years ago, which he currently owns, and it's running by itself. So he's got the hands-on experience to bring our Cerro Caliche project through to production. Now, the project is located in northern Sonora State. It's a 3-hour drive south of Tucson, Arizona, and a 3-hour drive to Hermosillo, the capital of Sonora State. Surrounded by producing mines and soon to be producing, the one that's soon to be producing is Agnico Eagle's Santa Gertrudis project. It's just due north of us by 11 kilometers, and to the southeast of us on strike on the same structure is the Mercedes mine, operated by Bear Creek Mining, which they recently acquired. And adjacent to us on the west is the Cerro Prieto mine. Now, that's an open pit heap leach mine, similar to what we're going to be developing over the coming months. Sonora State is probably the best jurisdiction in all of Mexico for permitting a mine. It is reliant on gold and silver production. Almost 40% of the gold produced in Mexico is derived from the mines in Sonora State. So the economy is reliant to a great extent on the production of precious metals. When we acquired the project in 2018, we acquired 1,350 hectares. And the old adage of where do you go to find a new gold mine is where the old-time miners were scratching around 100 and 150 years ago. And there's evidence of about 8 or 9 old mines on the site, which we have diligently pursued and been able to actually expand and discover some significant resources within each of these sectors. And last year, we produced a PEA, which had a resource estimation at that time of 440,000 mineable ounces that are shown in the pit shells in the dark lined or dark circles or ovals that you see in the map here. And the red dots that you see are the higher grade zones within these pit shells. Surrounding the pit shells, where we're showing in the gold color, is potential mineralization, which have been partially drilled, but not sufficiently to the point where we're able, that Micon International, the geological consultants, were able to calculate a resource. So the basic result of the PEA was we have 31.5 million tons grading 0.41 grams of gold, and the potential for another similar amount. So if you take, if you tally up the two, which I'm not supposed to, of course, but approximately 430,000 ounces of gold in the measured and indicated and inferred category, along with the potential for another 350,000 ounces in the same range of grade. So we've made a very, very good start over the past 3 years with our drilling. And this was based upon 41,000 meters of the drilling, with 6,000 meters additionally in outlying areas that are not accounted for because they're too far removed from the pit shell or they are too widely spaced. So we expect to convert those into real resources over the coming years. And in fact, some of the recent drilling we've done will attest to that. The pit zones, or the pit shells that you see on here, we believe it will eventually coalesce into 3 large open pits. And in fact, the northern pit zone, where you see 2 disparate pits that are about 1 kilometer apart, we've drilled in between those, and we recently announced that each one of these holes were successful. So that's going to coalesce into one larger pit. We have a new discovery off to the west called the Guadalupe zone that's not shown on here, but it'll eventually coalesce with the western pit zone. And we've extended the central pit zone as well. And the preliminary mine plan, as you see on here, is being now converted into more detailed engineering. The leach pad has been staked. The location for the crusher has been surveyed, and we're ready to do the engineering drawings on the crusher. And then as we go forward, we produced the PEA last October based upon the drilling to April of 2021, and updated it again on the basis of a mine optimization over the past few months. And the results of that were issued about a month ago, and the actual report will be filed probably in the next 10 days. But the result was that we optimized the mine plan from the basis of, instead of starting at 15,000 tons a day with a 7-year life of mine, we're going to start at 8,000 tons a day in the first 2 years, but increase the cutoff grade to 0.3 grams, which gives us a continuous 45,000 ounces a year net production over that 7-year life of mine. Now, the net result has been we've been able to reduce the capital cost through the mine optimization and reduce the risk from a PEA level 25 plus or minus 25% down to probably in the order of about plus or minus 15%. The metallurgy has been done to feasibility standards because we had told MacLeod Laboratories that we were not coming back to do any more work. We're going into production with this. The drilling has now been done to 35-meter spacing, which gives us measured and indicated. So tick the box for pre-feasibility study. The final element is the mine design. And that has been worked now on the basis of we're getting quotations, written quotations from each of the crusher manufacturers, the steel suppliers, and the chemical plant suppliers and everybody else. And we're tightening that now so that we have, within the next few months, a complete report that will be done to pre-feasibility standards. And if our project lender insists on going to PFS standard, we will have the evidence for the project lender. We'll pay the extra money to tighten up the report to PFS standard. But for the moment, we're quite confident that the capital cost of $26 million may still be able to be reduced through the crusher distributors providing us with the option of leasing the crusher and buying it back after 5 years. That'll reduce the capital cost by a further $8 million approximately. So the net present value at this point in time, $53 million, I believe is a starter for us. It's only going to improve from here on in. And one thing that's not reflected in these numbers is the additional drilling we just completed, 7,000 meters of additional drilling in areas of higher grade. And so we are confident that in the next edition of the resource estimation, which will be probably the end of July, early August, will have a meaningful impact on the resource size and grade. This one here just summarizes what I was just talking about, 45,000 ounces a year net over a 7-year current life of mine. My goal with the update to the resource estimation over the next 45 days, my goal would be, my target is 10-year life of mine. If that is the case, then the cost per ounce will be reduced from $1,200, slightly down below $1,200, because you're amortizing the capital costs over a longer period of time. Plus, if we're able to secure the lease to purchase from the crusher manufacturers, then the cash cost will diminish as well at that time. All the drilling we've done to date, that initial photograph you saw is where the greatest density of drilling has taken place in the Japonesa zone. But the 440,000 mineable ounces are essentially within that. If you put an oval around the Japonesa zone, Cabeza Blanca, the Abeja zone, you'd find 85% of the resource is within that sector. The new zones that are shown with yellow highlights are the recent drilling we did, the 7,000 meters. So I'll focus on the cross sections of A and B right now. And cross section A is the Colorado zone. And we've been able to generate some very, very high grade intercepts at the Colorado zone that are going to have a significant impact on that particular area. And will probably end up as the first area for us to mine. And here's some sections on the Colorado zone, followed by the Guadalupe zone. And we're getting, as you see on the bottom right-hand side there, SCR 286, we're getting 27.5 meters of 5.5 grams. We're up in the top right, we're getting 10 by 10 meters of 10 grams approximately. And in between, we're starting to see the coalescence of these high-grade ore shoots, which gives us a cause to believe that this particular sector in Colorado is a simple extension of the Guadalupe zone off to the west, which is this is a brand new zone off to the west called Guadalupe, with a zero coverage in the PEA from the Micon International. So that brand new zone is starting to yield some very, very good intercepts for us. And you can see areas of 5.5 grams. We've got 19 grams. And so we're very, very, very content to say that Guadalupe is going to turn into a nice resource for us in the next edition of the resource estimation. So to summarize where we're going to go now, over the coming months, we've submitted to SEMARNAT, the environmental agency, our environmental application for building the mine. And that was submitted in April. We anticipate receipt and approval in October of this year. We've been working for the past 2 years on the debt finance that will accompany the data receipt of the environmental approval. And the goal is to be in construction by the end of this year with a view to commissioning the mine in the first half of 2023 and be in production, full production by the end of 2023. And that's the summation of the project. So from start, from acquisition of the project to being mining, it's approximately 4 years. And I believe that's quite a substantial, almost a record, John. And I thank you very much, folks, for joining us. I'll summarize with the share issuance, the share outstanding. It's 120 million shares. So the management and insiders own over 20%. And we're in the process right now of closing a small $2 million financing, which will tide us over until we have the project financing in place. And we welcome everybody to come and visit the booth and ask us any questions, but we'll have a breakout session shortly. So thank you very much, ladies and gentlemen.